Boulder Group defines the net lease drugstore sector as single-tenant properties occupied by Walgreens, CVS, and Rite Aid. Cap rates in the single-tenant net lease drugstore sector increased from the third quarter of 2015 to the fourth quarter of 2015 for all three major tenants. Walgreens and Rite Aid each experienced a 10 basis point increase, while cap rates for CVS properties increased by 15 basis points. The main contributing factor to the increased cap rates is that owners of short-term pharmacy assets are trying to take advantage of the low cap rate environment in the net lease sector. Short-term deals in the drugstore sector are typically defined as properties with less than 10 years of lease term remaining. Another contributing factor to this quarterly increase in cap rates is that there's a general consensus that interest rates are going to increase, therefore, buyers are pushing back on cap rates. Lastly, there's significant investor concern over store closures from the pending Walgreens acquisition of Rite Aid. The merger has not been finalized, and the impact in potential store closures has yet to be determined. The impact remains to be seen. However, investors are most concerned about markets where Walgreens and Rite Aid geographically overlap. While in most states there will not be a great deal of overlap, according to the Wall Street Journal, there will be 14 states which Walgreens' footprint would more than double after the potential merger goes through. The states with the most overlap include Pennsylvania, West Virginia, Vermont, New Hampshire, and Maine. Additionally, it is expected that Rite Aid will become a wholly owned subsidiary of Walgreens Boots Alliance. Therefore, there will be a slight credit enhancement, but not the investment-grade entity behind most Walgreens leases. Typically for drugstore-related properties, triple net leases have no landlord responsibilities, and double net have capital expenditure responsibilities like roof structure and sometimes parking lot. Individual investors, which account for 85% of non-portfolio drugstore transactions, have a strong preference for triple net leases, especially if they are coming from a non-real estate background or are in 1031 tax exchanges, as they are looking for no management responsibilities whatsoever. The cap rate differential is typically about 25 basis points when comparing similar lease properties that have a triple net versus double net lease structure. Transaction velocity for 2016 in the net lease drugstore sector should remain at a similar pace to 2015, as drugstores continue to be at the forefront of investor demand. As cap rates for new construction properties with long-term leases continue to remain at all-time low levels, expect 1031 exchange buyers and private investors to remain the primary buyers. It has become increasingly difficult for institutional investors to acquire long-term lease drugstores due to the low cap rates associated with these properties. Additionally, investors searching for higher yield drugstore-related properties will seek short-term leased assets with strong store-level sales.